Hello, everyone. I'm Richard Byworth, the CEO of Diginex. I'm extremely excited to be here today. Diginex is a full digital asset ecosystem with the broad vision of bringing digital assets to the world, institutions and individuals alike. This vision statement is as much about making these assets more accessible through education and innovative product offerings as it is about working with regulators to make this asset class available to the world. Diginex was the first and only full digital asset ecosystem comprising a crypto exchange to be listed on NASDAQ, obviously up until the recent listing of Coinbase. This statement is important as it demonstrates a level of transparency and governance that this industry has been significantly lacking to date. Early adopting institutions need to mitigate reputational risk, and the Diginex ecosystem is unique in offering a regulatory-focused platform with NASDAQ standards of governance, and the institutions are coming. Last year, Fidelity conducted a survey of institutional investors and assessed their interest in digital assets. The results show an industry primed for explosive growth. 80% of those investors believe that digital assets are appealing, and 22% of those investors have already started trading derivatives. Derivatives are extremely important instruments for the continued growth of the industry, and I'm going to talk about that more in a moment. So just to touch on this institutional adoption that we're seeing, the pandemic and the fiscal and monetary stimulus that it's brought has seen increasingly rapid adoption of this brand new asset class, more than we could ever have anticipated at this point in the adoption curve. Many of you will have heard of Tesla adding Bitcoin to its balance sheet, but this was actually led by the CEO of MicroStrategy, who not only moved the company to a Bitcoin standard, but also levered their balance sheet to buy Bitcoin with what they've described to be a melting US dollar. This action has started to lead other corporates to put Bitcoin on their balance sheet. However, it's only the beginning. We ourselves have taken a leadership role in helping corporates to understand how to put Bitcoin on the balance sheet. That's through our partnership with the Treasury Management Institute, the European industry body for corporate treasurers. And these corporates are accompanied by some of the world's leading asset managers and investors, MassMutual, Tudor, Ruffer, and Guggenheim, to name but a few. Paul Tudor Jones actually recently called Bitcoin the fastest horse in this latest bout of monetary inflation. Not surprisingly, the investors that are leading this charge are traditional bond investors who've recognized the destruction of yields brought about by the central bank activities that we've seen to date. On the payment processing side, we've seen everyone from PayPal, Visa, MasterCard, and most recently Venmo start to replicate Square's strategy and move into the crypto space, offering a huge growth opportunity to its customers. And the banks are starting to come too. US banks, Goldman Sachs, Morgan Stanley, and even the very conservative Swiss UBS have stated that they will start offering crypto to their enormous asset base of wealth clients. Institutional adoption is coming fast. A watershed moment happened for the industry last month with the listing of Coinbase, one of the most established players in this space. Coinbase was founded in 2012 versus our exchange, which launched in July 2020. We're a fraction of their 52 billion market cap at 210 million. And today we do approximately on average $100 million of volume a day versus Coinbase first quarter 21 average of $3.72 billion per day. So we're 2.6% of their volumes at 0.4% of their market cap. Our fees are lower, but our growth is rapid and accelerating. We listed in October 2020, and that 7-month period has seen our volumes grow by around 50x. But the most important difference between these two companies is our focus on derivatives. Coinbase is purely a spot exchange, and we do both derivatives and spot. So just to talk about derivatives for a moment. 4 years ago, we started to see the emergence of derivatives in crypto. Today, derivative volumes are 3 times larger than the daily traded spot market. And while this sounds like an enormous growth trajectory, it's likely just the beginning. In the traditional market, similar instruments to crypto assets like FX and interest rate derivatives trade hundreds of times the underlying spot markets. The spot market today is illustrated in dark blue in the graphic, with turquoise representing the current derivative market. The potential for growth for crypto derivatives to continue with this meteoric growth trajectory is represented by the pink circle. We have built an exchange to the regulatory and governance standards required by institutions. We are ideally positioned to benefit from this adoption cycle as we continue to roll out the foundational pieces of a full prime brokerage stroke derivative experience. So let's take a step back and look at the full Diginex offering. We are a lot more than just an exchange. We are an entire ecosystem that's designed to be fully accretive to that exchange. So starting with the exchange, Equos is the name of our exchange. It operates under the Payments Services Act from the Singaporean Monetary Authority. This is one of the most credible regulators in Asia. And as I mentioned before, we are a spot and derivative exchange, and our growth has been explosive. An important point to note is whether Bitcoin goes up or down, we benefit. And quite often when the price of Bitcoin drops, we hit even larger daily volume numbers. And while it might seem like an odd thing to say, Equos volumes are genuine. This is not the case with many exchanges in this space. We also don't make markets on our own exchange, which is an important requirement for professional traders, many of whom have suffered at the hands of pretty much every other exchange who trade with full visibility of the order book flow against their clients. The growth of the exchange is going to continue to be fueled by the accretive nature of this whole ecosystem. Each business adds value and flow to the exchange. Starting with Digivault. Digivault is our highly secure digital asset custodian, and of course is a service provider to the exchange as well as to its other clients. Digivault has been built to government standards of security. Digivault is CREST certified and Cyber Essentials Plus accredited for cybersecurity. And that accreditation was designed by the Ministry of Defense in the United Kingdom. This week, we were fully registered under the FCA's AMLD5 regulation, and we have specific crime insurance for assets under our custody. The team is led by ex-Ministry of Defense security specialists and ex-Royal Marine Commando Rob Cooper. Rob has hired and built an exemplary team and product which continues to add features and functionality required by some major financial institutions. And when you have such a solid custodian offering, and as balances build and we add other features like borrowing and lending, you get to a point of very, very sticky behavior around these assets. Bletchley Park is our asset manager. We have a fund that's positioned to provide an on-ramp for institutional capital wanting exposure to this asset class. It's effectively a fund of hedge funds, which allows us to provide a portfolio approach to the very unique alpha that is available in crypto. So to give you an idea of the performance on a 12-month rolling basis, this fund, a market neutral fund, so non-directional, is estimated to have returned over 100% with a Sharpe ratio north of 3. This return profile is unique, and of course investors are paying attention, and so assets are growing nicely. We're going to be launching a US domestic feeder for the fund in July and anticipate significant demand from onshore US investors. Our fund team have assessed 350 different managers in this space, and we finalized a pool of what we call investable managers of about 25 funds. And this highlights something very important about the industry. There are very many talented managers and traders, but most of them are uninvestable. And this is where Equos and Digivault can come in and provide value to the asset manager. By running managed accounts on Equos and Digivault, Bletchley Park and other allocators can access far more funds. This means that investors can allocate to very talented managers, but don't actually need to touch their fund structure. And we have a first fund testing out the Equos managed account functionality at the moment. Next, Diginex Access, a multi-venue trading platform. This is integrated with two of the world's largest trading technology firms, FIS and Itiviti, both of whom have integrated it into their execution management, order management, and portfolio management systems. We are the exclusive provider of crypto trading platforms for both of these firms. And this is important because the first step that many of these institutions make is to use the technology that they already have on their desk, like Itiviti's Tbrix or FIS's Fronterina. Our Access product allows them to trade across Coinbase, Kraken, and of course, Equos, along with many others. Itiviti have around 1,600 institutional clients, FIS closer to 5,000. The partnership with both these firms helps put Diginex firmly in play as one of the go-to institutional providers. Equos Capital is our capital markets business. This is focused on the longer-term disruption that blockchain will bring to capital markets. Today, it is a small boutique securitization advisory firm. Every security that we issue comes with the option to convert it into a digital security. And in this way, we're effectively planting seeds for what we see as the impending total disruption of capital markets as we move away from paper to blockchain-based digital securities. And while this business is small and certainly insignificant today in terms of our overall business, it's a long-term play to position us at the center of that disruption that I talked about, a $200 trillion opportunity for the disruption of the capital markets. Two of our businesses yet to launch are Borrowing and Lending and Equos Investment Products. Borrowing and Lending will be doing its first institutional trades this month, with exchange integration coming next quarter. It's a very important piece of the overall ecosystem. As it evolves into the platform, it provides a service very much like the investment banking prime brokerage model, where you have core collateral and you can borrow and lend and build derivative optimizing strategies around your base capital in a capital efficient manner. For retail, this is a little bit like having your own private bank account around digital assets, where again, borrowing and lending and portfolio overwriting and underwriting with derivatives are essential tools for wealth protection and generation. And this creates a remarkable stickiness to the platform and increases long-term balances, which in turn become more accretive to the offering whilst increasing revenues. Finally, our investment products business will launch next month with its first exchange traded product, a Bitcoin tracker fund, which will be listed on the German exchange Xetra. Market makers for our product will source Bitcoin directly for Equos, and this will guarantee that all Bitcoin in our tracker is not tainted and has been through blockchain screening tools. This provides investors a differentiated product from the exchange traded products out there today. And additionally, assets will be stored in Digivault's custodian. And once again, as the business scales, it will continue to accrete value to that exchange business and of course the custodian. And as we evolve the business, we're going to be adding more product with guaranteed yield notes based on the borrowing and lending business and structured products to feed flow into the options market on Equos. So how do we make money? This is probably a good moment to highlight that the exchange makes money in up and down markets, actually often more so in down markets. When Elon Musk recently announced that he was no longer accepting Bitcoin for Teslas, the market dropped 15%. On that move, our volumes broke 150 million, setting a new record for the platform, 30% above the previous record. So down markets really help the volumes on the platform. Our exchange fees are aggressive and competitive to focus professional traders, but liquidation fees are a lot higher. And again, these big moves that I mentioned before drive liquidation levels, meaning higher average fees on the platform on days with large moves. The rest of the fees across the ecosystem vary very much by business, and they're illustrative of the fact that our ecosystem is designed to deliver a complementary yet diversified revenue stream, from the very attractive commissions of complex securitizations at 7% through to the high volume institutional rates on the exchange at around 2 to 4 basis points. But then you have the very sticky annuity businesses of custody, borrowing and lending, and asset management. And obviously these have interesting fee structures given how sticky those businesses are. So this is the roadmap for the exchange in the coming 2 quarters. Equo is our own exchange token, which launched last month. Since its launch, volumes on the exchange have quadrupled. This is again an example of the strong financial engineering capacity of our team. We have designed a token with strong incentives to drive volumes on the exchange, and that is exactly what it's doing. Along with the launch of Equo, this quarter will see the introduction of some of the foundational pieces of the derivatives ecosystem. User-defined leverage and isolated margin, combined with cross-collateralization, all improve user experience within levered and derivative products. I touched on managed accounts earlier. This really is unique. No other exchange is offering this functionality for asset managers and allocators to increase their capacity. Going into the next quarter, we're going to be launching our first version of the mobile app, which will increase the on-ramp of retail customers. And we're also going to have a daily settlement for Bitcoin versus US dollars, which means finally that you have a settlement price for physically delivered options, and then the structured products market can settle against that as well. These are all really important milestones in the delivery of a full functioning derivative market. On the subject of product delivery, the token deserves a little more attention. We are the first NASDAQ listed company to launch our own token, and it was specifically designed to incentivize and drive volumes onto the platform. The beauty of this overall technology is that it allows companies to provide future value to their clients in order to fuel early growth. The Equo token was never sold to our investors and users. Instead, it can only be earned by users through trading on the platform or acquired on the platform from other users who are earning it. The token pays out daily staking rewards, which means it effectively pays yield every single day, which incentivizes users to hold it rather than sell it, which means people don't want to sell it, and that then has the effect of pushing the price upwards. As the price goes up, so do the volumes, which grow revenue. And as revenue grows to the point of profitability, the company will implement a buyback program, which will drive the token higher, which will drive volumes higher. The token helps an early stage exchange like Equos drive volumes higher and higher and allow us to rapidly catch up with some of our incumbent competitors. For this last slide, I often get asked by investors, how do I get access to this asset class? And for investors in our stock, this shows the full value of the ecosystem play. The most direct option is investing into the asset itself. We facilitate that through our exchange and through our OTC business combined with our custody. Investors who want to make a more stable, reliable, and less extreme returns can invest in credible asset management products. And as highlighted, our fund is offering a very key, unique alpha opportunity for those investors in the crypto industry. For those who want direct exposure but can't touch the asset directly, they can invest in a listed product. And again, we roll out our Bitcoin tracker, our first exchange listed product on Xetra, the German exchange, next month. Mining is the one area that we're not involved in. However, this is a highly capital intensive business, and only the most efficient miners will consistently do well. There are focused organizations listed on NASDAQ that can provide this exposure to investors. But perhaps the best way to play this space is directly via the ecosystem that makes money whether the price goes up or down as a picks and shovels play. We offer the full remit of exposure to digital assets. Diginex is the pure play digital asset ecosystem, and I thank you for your time.